Hello and welcome to the Business Standard Morning Show. I'm Vinu Sandhu. Let's take a look at the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, पाजी ये 100% सही किया।
SBI is the banker to every Indian.
It cannot be more alarming. A report by the Intergovernmental Panel on Climate Change, or IPCC, released on Monday, has warned that if emissions are not cut rapidly, heat and humidity will create conditions beyond human tolerance. The report also described India as one of the most vulnerable countries where 35 million people could face annual coastal flooding in the next 30 years. The economic impact of this could be devastating. Agriculture and several other sectors will bear the brunt of emissions and rising temperatures. Our next report puts the spotlight on the climate crisis.
The United Nations Intergovernmental Panel on Climate Change released the second part of its sixth assessment report on Monday. Vetted and approved by 270 authors and 195 governments, it tells the world how climate change may spell disaster for humanity. The third and final part of this report is likely to come out in April this year. The first assessment report telling about the effects of climate change was released way back in 1990. The four subsequent reports were published in 1995, 2001, 2007, and 2015. The latest report has for the first time assessed the regional effect of climate change. According to the assessment, several big cities of the world are at risk. The report warned that Mumbai could face flooding due to sea level rise, while Ahmedabad was at risk of facing a serious heat wave. The panel also warned that the ability of humans and that of nature to adapt to climate change was at risk, and they may not be able to adapt anymore if there is further rise in global warming. It noted that over 3.5 billion people, or 45% of the global population, was living in highly vulnerable areas now. UN Secretary General Antonio Guterres went on to dub the report as an atlas of human suffering. He also said that fossil fuels are choking humanity. The report described India as one of the most vulnerable countries. It said that about 35 million people could face annual coastal flooding by 2050. While 45 to 50 million are at risk by the end of the century. The IPCC also warned that the damage to Mumbai from the sea level rise could be up to $162 billion a year by 2050. According to Down to Earth, India's country-level social cost of carbon emission was estimated to be the highest at $86 per ton of CO2. It means the Indian economy will lose $86 by emitting each additional ton of CO2. India is followed by the US, where the economic damages would be $48 per ton of CO2 emission. Saudi Arabia is close behind at $47 per ton of CO2 emission. The report also flagged that the world will see a rise in vector-borne diseases like dengue and malaria. And it also claimed that climate change will lead to an increase in mental health issues. The first part of this report, which was released in August last year, had said that global average temperature will see 1.5 degrees Celsius of warming in next 20 years from the pre-industrial level. The panel had called it a code red for humanity. The panel said that rising sea levels and groundwater scarcity will have a direct impact on the Indian agriculture sector. Production of wheat, pulses, coarse, and cereal yields could fall almost 9% by 2050 in the country. In the southern part of the country, maize production could fall by 17% if emissions are high. And these fall in production could cause price spikes in India threatening food affordability, food security, and economic growth, the report went on to say. It is also estimated that both the Ganga and Brahmaputra river basins will witness increased flooding due to climate change, and continued climate change will cause decline in fisheries.
The new IPCC report that was launched on the 28th of February shows that climate change is projected to have a number of severe economic impacts. For instance, in Asia, water-related impacts of climate change on all sectors of the economy are projected to reduce GDP by approximately 1% in high-income countries to up to 3% in low-income Asia, low to middle-income Asia by 2050 without adaptation or without mitigation. So that's quite a substantial chunk of the economy that we are talking about. And this report particularly focuses on what the economies can do, what countries can do to adapt to climate change. And the findings are also very clear and stark that while there are a lot of adaptation options that have been already used by various sectors of the economy, be it agriculture, industry, energy, etc., the reality is that even many of these adaptation options will not remain effective at a higher level of warming above 1.5 degree from the pre-industrial industrial times, which basically means that we would also have to mitigate, we would have to reduce greenhouse gas emissions for adaptation to take place. And this has to be done in a way that is sensitive to these kind of GDP losses, which are anyway, any kind of losses to the economy would be borne mostly by the poorest segment of the population who are already very, very vulnerable. What's important is very clear that for climate change, we have to both adapt as well as mitigate. But many of the mitigation options itself are something that, say from a land or a water perspective, that can make some of those impacts even worse. Like some of the very common mitigation measures like afforestation, reforestation, or bioenergy, for example, can take away land for agriculture. And that is quite an important issue in a country like India, where land is scarce and there's a food security issue already going on. So even our mitigation, be it large-scale solar parks or be it any of these other mitigation measures, we have to be very careful that the siting of mitigation is such that it doesn't compromise with existing land and water insecurity.
Countries build policy responses to tackle climate change on the basis of finding of IPCC reports. The panel has now clearly said that if the temperature rise soared past the 1.5 degrees Celsius threshold from the pre-industrial times, several changes could be irreversible. The panel has said that the 2 degrees Celsius target could be disastrous, so the governments world over should ensure that lack of funds and political commitment should not come in the way of keeping the global mercury in check.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
There is a change of guard at the Securities and Exchange Board of India after 5 years. The new chief, Madhabi Puri Buch, has many firsts to her credit. At 56, she is the youngest Sebi chief and the first woman chairperson of the market regulator. Here's a look at her journey so far.
On Tuesday, Madhabi Puri Buch took over as the new chairperson of the Securities and Exchange Board of India, which regulates India's $3.3 trillion stock market ecosystem. She has been appointed for an initial period of 3 years by the government and replaces Ajay Tyagi, whose 5-year term ended on Monday. She joins at a time when the markets are volatile due to the Russia-Ukraine conflict and India's largest ever initial public offering by Life Insurance Corporation of India is about to be launched. She brings many firsts to Sebi. Buch is the first woman to head India's stock market regulator. And at 56, she is the youngest chairperson. She is also the first non-IAS individual since 2002, as well as the first person from the private sector to lead the market's watchdog. However, she has had a more than 4.5-year stint as a whole-time member of Sebi, a post just below the chairperson, till October 4, 2021. Puri Buch has more than 3 decades of experience in the financial sector. An alumna of Delhi's St. Stephen's College and IIM Ahmedabad, she joined ICICI Bank as a project finance analyst in 1989 and was there until 1992. She rejoined the private lender in 1997 and rose through the ranks to become an executive director in 2006. Buch then served as the CEO of ICICI Securities, the broking and investment banking arm of the ICICI Group, between 2009 and 2011. During her stint at ICICI, she held different positions including the head of marketing and sales, head of product development, head of operations, and the head of brand marketing. She was among the handful of executives who were groomed by veteran banker KV Kamath, the founder and former CEO of ICICI Bank. Before taking charge as the only female whole-time member at Sebi in April 2017, Buch served as the head of business development at private equity firm Greater Pacific Capital in Singapore and acted as a consultant for New Development Bank in Shanghai. Besides, she has held non-executive director roles in several organizations, including Max Healthcare, Zensar Technologies, and Innovin Capital. She is also the founder of Agora Advisory, a consulting and incubation firm. As a SEBI whole-time director, she was part of many committees and handled the Market Regulation Department, Integrated Surveillance Department, Department of Economic and Policy Analysis, the National Institute of Securities Markets, and IT Department, among others. After the 5-year term ended in October 2021, she was named the head of SEBI's Secondary Market Committee in December. During her previous stint at the regulator, she tried to inculcate a culture among her junior staffers to extensively use modern technology and data. In fact, she headed a technology panel that explored solutions for early detection of market anomalies. She had once said that turning Sebi into a tech-savvy regulator was her single biggest achievement. Buch is known for her data-driven approach to decision-making. She was instrumental in bringing important changes to mutual fund regulations that benefited investors. These include a further reduction in the cost of investing, scheme classification and disclosures, and introducing more safeguards for debt schemes.
I'm actually quite delighted to hear about the appointment of Ms. Madhabi Puri Buch as SEBI chairperson. She comes with many firsts, the youngest person in that role, the first woman in that role, and first person from IIM Ahmedabad in that role. So lots of kind of very dynamic background. And having worked with her as part of a mutual fund advisory committee when she was a whole-time member, I can attest to the fact that she is very data-driven. She is very, very logical. And I think she'll bring a completely new flavor to running the organization. So I wish her great luck.
In her new role, she has to hit the ground running. And perhaps the most urgent task is to review the internal governance mechanisms at the exchanges after the Yogi scandal at the NSE highlighted the gaping holes in their governance systems.
क्या हाल?
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Markets were eager to know who will be at the helm at Sebi. Buch has taken charge of the regulator at a time when the equity markets are in turmoil due to global uncertainty, and is asking investors to remain cautious and look at safer investment options. Here's a report on the sectors and stocks which experts say are a safe bet.
Global headwinds, followed by the ongoing Russia-Ukraine crisis, has soured investor sentiments across geographies. The same was reflected in the domestic equity markets, which have been highly volatile in the last few weeks. The trend may continue in the short term or until a resolution appears on the horizon for the geopolitical tensions, experts say. Given the multitude of uncertainties on the global front, the markets have seen a sharp correction in February, with the benchmark BSE Sensex and Nifty 50 indices slipping around 5% each. Given the volatility, analysts suggest investors choose stocks wisely and look at defensive plays within the information technology, FMCG, and healthcare space, believing that these could be the safest bets for investors in the present scenario. On a year-to-date basis, the BSE IT index has corrected 12%, while the BSE FMCG index has demonstrated better performance with a relatively smaller cut of 6%. The BSE Healthcare index, meanwhile, has fallen 11% so far this year. In comparison, the benchmark Sensex has lost 3.4%.
I think, pharma, there is all bad news. So pharma and FMCG, I think it is the best time to slowly buy. The worst is, everybody knows your sunflower oil and your other commodity prices are at the highest. And FMCG company, they are trading at an attractive valuation. So there, in next few days, there can be a good correction in FMCG. That will be a good entry point.
Prices of key raw materials have continued to inch higher in the last few months, with both palm and crude oil at multi-year highs and materially above the levels in the December quarter. Analysts say the product price hikes will likely continue going forward given the higher input costs, which could further delay a potential volume growth recovery. Staple stocks have corrected 15 to 30% from their 52-week highs. While there have been some earnings downgrades, valuations have still derated and are now close to 5-year averages across most companies based on current estimates. Of course, earning downside risk persists. Jefferies. Among the lot, IDBI's capitals, AK Prabhakar prefers Dabur HUL and Britannia in the FMCG sector, Gland Pharma, Biocon and Sun Pharma in the healthcare category, Zensar, Wipro and HCL Technologies within the IT pack. Meanwhile, Amit Kumar Gupta, portfolio manager at Droid Financial, is bullish on hospitals within the healthcare category, as he believes these players will be largely insulated from the current headwinds and foreseeable interest rate hikes. Let's listen to what he said.
There are a lot of issues in pharma. So, like API-based pharmas, there has been a lot of correction in stock prices also, and the raw material inflation is also quite high, and I don't think it will be coming down soon. So, pharma as such is not really a defensive bet at this point of time. Okay. Apart from that, like US generic players like this Sun Pharma, Lupin, these are also facing pricing pressures from US. So, these are not really the defensive bets. Probably the defensive bets is in hospitals because they will not be so much impacted by the rising interest rates. They may be impacted by the raw material inflation, but not so much about what is going on in the world. Mid-cap and small-cap IT is concerned. In that case, obviously they have corrected 30-40% in the past 3-4 months. So value is emerging in that. Actually, what we are positioning our portfolios is we are betting on the domestic consumption, but which is a little discretionary in nature.
On Wednesday, the markets will open after a day's holiday on account of Mahashivratri. Besides reacting to the global markets, geopolitical issues and the GDP numbers for the October-December 2021 period for India announced post-market hours on Monday, stock-specific action is likely to continue.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है. Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
From markets, let us now move on to the crisis which is making it nervous. India on Tuesday launched an operation to bring home hundreds of students stuck in war-torn Ukraine. While announcing the Operation Ganga, Prime Minister Narendra Modi asked the Air Force to join the evacuation exercise. Here is how the challenging operation is being undertaken.
As Ukraine closed its airspace for civilian flights after Russia began its invasion, about 16,000 strong Indian diaspora, mostly students, were left stranded in the war-torn country. As students made appeals for evacuation from bomb shelters, New Delhi launched a multi-pronged evacuation plan named Operation Ganga to bring home its citizens. Accordingly, Indian missions in Poland, Romania, Slovakia and Hungary have been making arrangements to receive Indian nationals from Ukraine and fly them out of their respective countries under Operation Ganga flights. The cost will be borne by the centre. The cost of operating a two-way evacuation flight is reportedly more than 1.1 crore rupees. The amount is likely to go up depending on the duration of the flights. 24/7 control centers have been set up under the mission to assist in the evacuation of Indian nationals through Ukraine's border crossing points with the 4 countries. The government announced that 4 union ministers will travel to Ukraine's neighboring countries to coordinate the evacuation. Petroleum Minister Madhabi Puri would go to Hungary, Aviation Minister Jyotiraditya Scindia to Romania and Moldova, Law Minister Kiran Rijiju to Slovakia, and Minister of State for Civil Aviation VK Singh to Poland. The government also created a dedicated Twitter account named Op Ganga Helpline to assist in the evacuation by sharing important advisories and instructions. The Union Health Ministry has revised the mandatory international travel guidelines for all Indians being evacuated from Ukraine, allowing them to board flights without a negative RT-PCR report or vaccination certificate. The travel guidelines have been revised on humanitarian grounds. Till Monday, Tata Group's Air India reportedly evacuated 1,396 Indian nationals in 6 evacuation flights that were chartered by the government. The airline used Boeing 787 Dreamliners for the services. The first flight under Operation Ganga brought home 219 students from Romania's capital Bucharest to Mumbai on Saturday evening. Other flights carried up to 250 Indians each from Bucharest as well as Hungary's Budapest back to India. Operation Ganga gained speed after SpiceJet, Air India Express and Indigo joined the mission, operating special flights to Bucharest and Budapest from Monday. Indians who have been able to flee Ukraine and enter its bordering countries have been leaving on the evacuation flights. Indigo operated the flights using its Airbus A321 aircraft, whereas SpiceJet deployed Boeing 737 MAX 8 planes.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार, 45 डिग्री सही है।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट। Finally I agree.
SBI is the banker to every Indian.
Several C-17 aircraft are likely to be deployed to bring the students home. That's all for today. For more news and analysis, please log into our website www.business-standard.com. We too will be back tomorrow morning with more. Stay tuned and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.